I will tell you what, this market is just like I like my drinks at a restaurant, bottomless. Holy cow, it seems like there's no bottom in sight, and that's exactly what I want to talk about in this video is the bottom. Is the bottom in? Are we going to see the bottom happening in the market soon? Is the market going to crash further from here? Well, I have some insights for you that I think are going to be rather interesting, and I'm going to provide some commentary. We're mostly going to focus on QQQ, which tracks the NASDAQ 100, but I will also give commentary on the SPY, and then also something very curious about IWM as well, all of which I think that you're going to find very interesting, insightful, and also helpful at informing your trading decisions, even though I can't tell you what to trade. Now, mind you, if you guys want to see me, my trades, and also the other analyses that I put out, the other conversations I'm having, the other panel experts who have joined me over at the Discord, that link is down in the description. You can join a community of thousands of members. We are over there as we speak. You guys can come on over and you can be part of that. Use the code word CASH when you sign up. It's going to save you 50% off that first month sign up. And then also later on tell you about courses where you can learn more about trading in the markets using code word doctor. That's also going to save you a ton of cash. In the meantime, let me just tell you, today on an Airbnb short, 263% on that one, 25% on shorting the market through SQQQ, and then I also did some other setups there. As a matter of fact, I made $30 from the toilet today on a 0 DTE. Maybe I shouldn't be trading from the toilet on my laptop, but yet there I was. So in any case, moving on from that, I also have some trades set up. I shared them over at the Discord. Come on over if you want to see them. With that said, let's get into the charts on this. I'll tell you what I'm seeing, and you guys can let me know what you think of it. So the very first thing, I said we would be focusing on QQQ, the ETF that tracks the NASDAQ 100. And so you'll see all these different words on here. I shared this before, but once again, just like the last time the market janked down, I want to talk about where that potential bottom could come in. And I think our story should go back all the way to what we have for down here with this Great Recession and why it says 786 on it. So let me move it up here closer to the middle of your screen, and we're also going to stretch it out. There we go. Make it nice and big so it really exaggerates the movements. So what we're going to do is we're going to grab the Fibonacci retracement tool. We're going to find the bottom from October of 02, and we're going to go to the peak just before the Great Recession sell-off. And what you'll see is the last Fibonacci retracement level that we made to was 786. That means that from this movement, from bottom to top, we lost about 3/4, a little over 3/4 of the value from that last movement in that sell-off for the Great Recession. Absolutely nasty, ugly, and disgusting time in the markets. How much did it give up during that time? And I'm not going to do this for every time because I want to keep the video short. I want to respect your time. 54% drawdown in the NASDAQ 100. The financial system, I can't stress this enough, the financial system itself almost collapsed back in the Great Recession of 2008. The Fed's going to do whatever they can to try and keep that from happening ever again. So keep in mind, 786, that's going to be the greatest number for Fibonacci extension that you see on here out of what I have to show you for these retracements from the October 2002 low until we get up to the next peak before the next major sell down. And when we do that, we're going to grab this peak and we're going to move it up here to just before the flash crash of 2015. And what you might be able to see, it might be a little bit hard to see this. I'm going to take down the moving averages for the moment. There we go. This big long wick on the candle. Now, mind you, this is a monthly chart. So we're looking at the entire month of August. In 2015, we came down and penetrated the 23.6, but we stayed up above the 38.2. So that's why this says 236 on here for the flash crash of 2015, because the lowest Fibonacci extension value, our retracement value that we found ourselves at from October 2002 until August of 2015, the lowest was the 23.6. So once again, keep that in mind as we move forward. So far we had something that was a 786 and a 23.6. So let's move this up to the next peak that we have prior to the Fed rate raise and the trade tensions that we had, which kind of sounds similar to where we're at right now. Even though we're not seeing the Fed raising rates, the Fed still isn't cutting as aggressively as we want. So where did we peak out on this thing? Well, we peaked out in October of 2018. We bottomed out by the time we got to December of 2018, and we still only reached the 23.6 in terms of the Fibonacci extension. So that was just on fears, mind you. We actually had the Great Recession happen. We actually had some major black swan event that pushed us down as far as it did. It is the highest number that you're going to find for retracement out of everything that's on here. So let's move on to the COVID lockdowns that happened. Once again, all I'm moving is the peak of this thing. And when we move that, yeah, we pushed down through the 23.6 from the high in February of 2020 into March before rebounding in April. Just the 23.6 got crossed for COVID. So yeah, that was horrible, but then Fed cut rates to zero pretty much immediately when that happened, or what seems like immediately when I look in hindsight. And then on top of that, we had a whole bunch of federal stimulus coming our way, and you can see the rocket ship that the market went on as a result following that time. So that's the 23.6 that we reached for the COVID lockdowns. We did not make the 38.2. That was a horrible time, but it was quickly put into place, that easy monetary policy and stimulus that just kept pumping things. And if you watch my other videos where I talked about the 4 pillars that prop up markets, man, oh man, there was a lot that was made shiny when that happened. So let's move on. So let's go to the peak of 2021. So when we move there, and you can see I have a whole lot to say here. Now, mind you, 23.6 was the last several things that we made it to. This one actually made it down to the 38.2, and that was when we had runaway inflation fears as inflation went up by March of 2022. I think it went up to like 9% or something like that. And we're like, is inflation getting away from us? Is the Fed going to have to crush us? Monetary policy, how much does it have to tighten? So we had supply chain issues, Fed rate raises. There's just so much going on. So much that was actually confirmed, by the way. Confirmation is the big thing. So Great Recession had confirmation. 2021 to 22 came with some confirmation and some fears. Nothing like destabilizing the entire global markets. So still horrible, still with some confirmation. We got to 38.2. Let's move on from there into the most recent peak, because this is the next time where we're starting to see that big sell down. And so let's move that peak up here to see what we see. Well, the 23.6 happens to be at about 417, almost 418. That'd be the 23.6, which is still pretty far down from where we're at right now. So as of today's close, where we closed at 450, we could fall another 5 to 6% from where we're at right now to see that value happen. Maybe I should say 6 to 7% to see that value happen, to come down and push us down to the 23.6. We have inflation and recession fears right now going on, but just the fears. That's why I think one of the potential bottoms, this is one of my predictions for bottom, that if we do keep selling down, that we do sell down to the 23.6 just on the fears alone. If we start to get evidence, if we start to get confirmation that we go to the 38.2, that's black swans aside. And that 382 happens at about $342 per share for the NASDAQ 100. What else does that associate with? That associates pretty darn close within dollars, within $6. So about 1.5% of the peak that we had in 2021 and the trough that we had. We're darn close. I should say the tops of this. It's actually the low that we had in October of 2023. So the peak in 21, the low in 23, pretty much coincides almost exactly with the 38.2 that we have here. So I think those are the two levels that, depending on if we just have fears that things are cracking or that we start to see things cracking, I think those are the two values. If black swan layers on top of it, if some major catalyst event happens, then we might have to put into question the 50 and the 618. But putting those aside and just talking about fears, or talking about fears with some confirming evidence, 23.6 or 38.2 are the two values that I think we can look to where we start to have a bit more certainty over a bottom. Now, let me put the moving averages back up for a moment, because today we came down to the 50-month moving average, and that can be very critical for a bounce. One of the trades that I put out is just in case we get that bounce going into Friday, following a day where we sold off over 5% for QQQ. Once again, tracking the NASDAQ 100. The SPY just barely scraping above minus 5%. IWM down 6.42%. A bounce could happen for us, but we could most definitely keep selling down. Let me go down to the daily chart on the Qs before I move on from it, because one of the important values that we have different Fibonacci extensions, and we also have, looking left, this historic support area and resistance area that we find ourselves at right around 447. I think being just above that, that's this one extension value that you see on here. We can even do another minor extension value that also doubles up some of the support that you have for where we could sell down from this level. So I think today was that big fear day. I think that tomorrow the market takes some time and starts digesting it. So right at about 447 is about where we're looking, and that puts us in line with this peak that we have over here back in March of 2024. The low that we saw in May of 24, and also the low that we saw in September of 24. So we could have that bounce. Maybe we found a temporary floor for right now. then we have to go back. We have to find out, okay, where's the ceiling on this thing? Let's not forget that we also gap down, and gaps tend to be filled. So there could be significant upside as the market digests and maybe corrects a little bit for what's happening. So I should also say, I think Trump is posturing right now. I think that he means hardball, but in a way that means he's playing hardball to negotiate with other countries. I think this opens up a conversation that they wouldn't otherwise have. And I think the whole reciprocal tariff thing is, hey, this is the hard line that we're drawing, coming out that you need to meet this. So that way they come to the table serious with the deals that they have to make. And don't forget what Trump said on a number of occasions, we're going to make a lot of money. And when he says that, are they going to make a lot of money from the top of the market? I've talked about my conspiracy theory before, and I honestly think, let me put myself back up on screen because this is important. It feels like less of a conspiracy theory all the time that he's trying to bring the market down because he wants to start a sovereign wealth fund. Why would you start it at the top? I said that weeks ago. I'm going to say it again. Why? Why would you start it at the top? People are like, why is he doing things that are bad for the market? We thought Trump was good for the market. Honestly, I think that Trump is good for the market, but he's much better at deal prices than he is at premium prices. So if he's able to drive the market down to those deal price levels and allowing retail traders, for instance, to paper hand and start to actually have some reasonable valuations where things really start to look attractive and shiny again, why wouldn't you start then? So they said the sovereign wealth fund in the next 12 months. Well, if we find bottom sometimes over the next 12 months, and I think that we find it probably sooner than that. So I think within that time they'll find it, and I think they'll find this magic reason why, hey, now's the time for sovereign wealth fund. I mean, why not? And we're going to do it to stimulate the economy. We're going to do it to stimulate growth. We're going to adhere, in my opinion, I don't have facts to back this up, but this just makes total sense to me. I would much rather start that wealth fund at what I perceive to be discount prices and bargain prices than I would like to do at all-time high, record high prices. So why not drive the market down if you could? You know, he could take this opportunity to get those deals in order that not only are the prices cheaper in the markets, but then there's also better trade deals across the globe. That actually sounds pretty shiny. Let's get back to the charts though, guys. All right, so popping this back up here for you. Going over to SPY, the 23.6, assuming that we're under the same circumstances we were for the NASDAQ 100. So SPY tracks S&P 500. 23.6 is down at 486. We're almost at that 50-month. As we look at this, that can be an area for major support. It's what we found in October of 2023. We haven't been back there since. We did fall down through it in 2022, but remember, that was with confirmation, not just fears. So keep in mind, we don't have a lot of confirmation of recession. We don't have a lot of confirmation for runaway inflation. We don't have that kind of stuff at our backs yet. I think that bounces are imminent. I don't think we make that straight shot down below the 50. I don't think that we come down. I'm sorry, this is the 20-month right here. The 50-month is in pink. So the 20-month, I think we have reason to believe that we could bounce at the 20-month. If we pull down to the 50-month, that's where we bottomed out with some confirmation of some bad times before things started turning around, was support at that 50-month. We could find those deals come in that could pretty much coincide with what we see for the 23.6. 408 is that 38.2. That's with some confirmation that would push us down below the 50-month, which COVID was able to push us down below for a little bit, but the monetary policy sprung back around the other way, and we overheated the economy, and then you watch that rip that took place. We want to watch for similar circumstances to come our way. IWM, this is the cool thing for IWM. Let me see what I can do to clean this up for you here. I'll pop this into a hidden status here. So hide that one, and let's also hide our moving averages so they're not distracting. And I just want you to look at the stripes that are on this thing. Red, up above red, we barely stay there. To me, that's a sell zone for IWM. I wouldn't like to buy up above those levels because at some point in time, probably the near future, even though this is the monthly chart, look at all the stimulus that happened, and it wasn't until November of 2021 hits that we found ourselves in different circumstances. We get massive sell down. IWM lives between white and yellow. That's where it spends the majority of its time, is trading between white and yellow. Ladies and gentlemen, we just fell below the white line. We are heading towards the green line. IWM lives its life above the green line. Look at the few times. We started this thing back in March of 2009. We just barely touched on it in October 2011 before rebounding, touching white. Touched it again pretty much November 12, rebounded again. Look at that steady climb upward off green. It took until January 2016 into February where we went below it. We were down below it in February. January, February, by March, we were back up. We closed above it again. And then you can see we punched down just down below it January 2019. recovered significantly. We punched down below it briefly during the pandemic, rip. We punched down below it back in October of 2023. Oh man, everything's in the toilet, rip. And now where do we find ourselves again? We find ourselves just barely above the green line, which to me starts to set up some of the attractiveness. Maybe not yet. Maybe while the rest of the markets haven't necessarily found bottom on this thing, but we're starting to get in this bull channel on the technical side of things, starting to get into attractive pricing on IWM, on the Russell 2000 stocks. Remember, if we get down below that, to me, that screams leaps. So that's what I got for you for the indices, and that's the thoughts that I have for the current market for where we could find those bottoms. I think we should really pay attention to 23.6. I think that we should really pay attention to 38.2. Even on IWM, which by the way, just so you have those prices, the 23.6 is at 192. We closed today at 189. Maybe we see a temporary bottom off that major Fibonacci retracement value going once again all the way back to October 2002, just like what we did with the NASDAQ 100 through the Qs. 160, by the way, is the 38.2 for the Russell 2000 stocks. And I do think it's easier for us to reach the 38.2 values because I think it's going to react in a much bigger way to recession or inflation fears that we would have or confirmation that we might have than what we're going to have for the S&P 500 and the NASDAQ 100. So that's what to watch for IWM. So guys, if you want to see more of my analyses, see my trades, see my technicals that I put out over at the Discord, you can. The other panel experts do the same thing as well. There's a whole bunch of us, a whole team of us, as a matter of fact, all fighting for financial freedom, and we're there to help you do it. You can sign up using the code word CASH when you do. That's going to make it less than $1 a month for that first month to be part of that. Try it out, see what you think, and then it goes up to under $2 a month. You're going to love it though. The people over there is the best community that I've ever had the pleasure of being part of. And there's also products that go along with it, such as the bread bot for helping you find when stocks are going to move up, down. Same thing for cryptos, by the way. It'll work on either one of them. If we can chart it, we can track it with the bread bot. You guys can try. You guys get access to that tool with the earner tier. Then you also have access to the AI tools that are there and the advanced charting tools as well, all for signing up. So you get the panel experts, you get the bread bot, you get the charting tools, the AI stuff that's all over there. And if you guys want to learn more about this yourself and you really want to invest in yourself, that coursework down there for Stockmo Academy, technical analysis, technical trading using the bread recipe talks exactly through how to set it up. I use it myself. It's the cleanest, most beautiful trading strategy I've ever had the pleasure of knowing about and using. Thank you, Stockmo. And then also the options course. I use options all the time. Like I said, today with those options, Airbnb up 263% on that option, up 25% on SQQQ, and then the 0DTE option I use once again through the bread recipe. As I used it, I'm telling you what, for that one, let me think for a moment because I didn't calculate that one. That was a 30%, actually 20 to 30. I'll put it in that ballpark, 20 to 30% gain just over about 2 to 3 minutes of time, even from the toilet. Use the bread recipe. It's that easy to use. So guys, check those links down in the description. You won't be sorry that you did. Code word CASH for the Discord, Doctor for the courses. Go ahead and sign up. You guys are going to love what you find over there. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.